Hey traders, have you ever found yourself in a situation where you are making excellent profits, but everything just vanished off because you didn't lock it in? Well, today I'll show you how to protect your gains with different methods of trading stop loss. Stick around till the end. I have a special free gift for you, a free stock market trading course, and invite to my exclusive live workshop. So let's dive in. Let's assume we had planned a short trade, identified this drop-based drop supply zone, waiting for price to come back into supply level for us to initiate a short trade. Price came back on this particular candle where my cursor is. So let me just use the highlighter here. Yeah. So on this particular candle, you got your short entry. Friends, after you enter the trade, you need to have a trade management plan in place. If you do not have a trade management plan, don't know how to trail your stop losses, how to manage the trade, then you will start acting on your emotions of fear and greed. So after entry, what happened? Price moved down in your favor. So you're feeling good, it's going down in your favor, but then started retracing back. So if there is no plan, what happens is when you see a small movement against you, as a new trader, you are tempted to just take this small profit and exit the trade. So now you have exited a trade, whereas you could have got a much bigger gain. So that happened because you do not have a trade management plan in place. So we are going to look at multiple ways how to trail stop losses. So the first method is based on R multiple. So let me just write it down here. Method 1 is R multiple basis trailing stop. So what do you mean by the R multiple? So by R multiple, I mean how much I am risking in this trade. What is my risk? So let's calculate that. I'll just use this short position tool, place it at my entry point, adjust it slightly above the zone at stopping point. So let's say around here is my stop loss. So roughly about 53 rupees was my stop loss for this trade. So my risk, if I take only one share and that goes against you, I tend to lose 53 rupees. So since it's a swing trade overnight, you'll have to do it in derivatives. So whatever is the lot size multiplied by 53 would be your loss on one lot. So the risk, the R over here is 53 rupees. So whenever the trade moves in your favor by 1 hour, then you will move your stop loss. So that is the trade management plan here. So when does that happen? After entry on this particular candle itself. Can you see risk reward ratio 1? So you are making a 1 hour gain here. So at this point, you could have moved your stop loss to break even at entry point. So this particular candle came very close to entry point but did not take that stop loss. So you're still in that trade. So it's your choice whether you want to move it to break even at 1:1 or not. So now whenever the trade moves another 1 hour in your favor, you will again trail your stop. So let me just draw a line which is the 1 hour line here. At this particular level, we are making 1 hour. So let me write it down here. So that's your 1 hour gain. Now let's check when are we making a 2 hour profit. So 1.59, 1.7, 1.8, around here is where you are making a 2 hour gain. So at this point, what do you do? From your stop loss which was at break even, get it to the 1 hour level. So around 1485 would be your trailing stop. So now if this trade turns against you, you are at least going to lock in 1 hour profit. So let's draw another line which is the 2 hour line. So friends, one thing in trade management, trailing stop loss, the stop loss has to move only in the direction of the trade. Never loosen it, always tighten it. So now when the trade moves another 1 hour in your favor, you are going to get it to the 2-hour level. So at this particular point, how much is it? We are making roughly about 3:1 on this candle here. So let's draw another line, which is the 3-hour line. So after that, did it move another hour in your favor? Let's check. So when it moves to 3-hour, now your stop loss would come to 2-hour. So if the trade goes against you, you are at least assured of a 2-hour profit. From here, does it go to 4-hour? Yes. So on this red candle, it went down to a 4-hour gain. So at this particular point, now you will move your stop loss to the 3-hour level, which is around 1376. So this particular green candle came back and hit the trailing stop. So you would have exited this trade with a 3-hour profit. So this is trailing basis on R multiples. Yeah. So it's quite an effective trailing method. And next we are now going to discuss another method, which is basis on moving average. Yeah. So what is that? So let me delete all these lines. I don't require them. So method 2 is basis of moving average. So moving average trailing stop loss method. So this is another powerful method wherein you can use either a 20 period EMA or a 50 period EMA or any moving average that suits your trading style. So for swing trading, generally a 20 period moving average works well. So the idea is simple, friends. For a short trade, as long as the price remains below the moving average, we stay in the trade. If it closes above our moving average, we will exit. And it is vice versa for the long trade. In a long trade, what you will do is you will wait for price to remain above the moving average. As long as it is staying above the moving average, you are in the trade. The moment it closes below the moving average, you would want to exit the trade. So let me just add the 20 EMA. So under indicators, technicals, I'll just search for exponential moving average. And I'll just change the period to a 20 period moving average and slightly thicken the line. So after entry, you got your entry, price is trading below the moving average. So there is no candle that has now come and closed above the moving average. As long as price is trading below, you will stay in the trade. Finally, this candle here on 24th of March has closed above the moving average. So what you can do now is move your stop loss above this candle. So if price from here moves up against you, you are going to lock in a very good profit. So you will be exiting around 1348. So you're going to make good risk reward. Let's check what is the risk reward ratio here. So entry, stop loss slightly adjusted beyond the zone. So it was about 53 rupees. And now you are going to make at least a 3.5 gain. If it moves against you from here, you are assured of a 3.5 reward to risk ratio here. And if it continues moving in your favor, you are still in the trade. So friends, this works good for trend followers, and in a good trending market, this strategy works well for trailing stop loss, which is the moving average trailing stop loss. And if you are a positional trader, you can use a longer period moving average like a 50 period moving average, but for swing trading, 20 period works well. So let's delete all the markings here. Method 3, the third way that we can trail our stop losses is basis of swing highs and swing lows. So what do you mean by swing highs and swing lows? So these are basically pivot formations where a stock turns around. So let me just draw it for you. How does a pivot look like? So pivot high, price going up, stops going up, takes a turn. So wherever the stock is pivoting, this particular point is called your swing high. And what's a swing low? Price falling down, stops falling down, turns up. So V and inverted V formations, these are this is a swing high, this is a swing low. So as the trade moves in your favor, you can move your stop losses above swing highs and swing lows. For a short trade, you are going to move your stop loss above any swing high that is formed. So whichever time frame you are trading on that particular time frame, look for swing highs and swing lows. But friends, here it's slightly discretionary, because what do you consider as a swing high and a swing low also matters. So in this particular trade, after entry at this area, this candle is having a lower high, a higher high and a lower high. So just a 3 candle formation here. So on a 3 candle formation, this green candle high is the swing high. But is that a major swing high? Not exactly. It's like a pivot. So to make it rule based, what we can look at is we can look at fractal formations. So what are fractal formations? It's a 5 candle formation. So for a fractal high, what do you look at is the center candle will have the highest high. So in this particular area, can you see candle 1, candle 2, candle 3? The candle 3 high is the highest high. So let me just zoom on to that area. Candle 1, candle 2, 3, 4 and 5. So these 5 candles would form the fractal. Let me just hide the EMA. So here this particular candle high is the highest high. So that's your fractal high. So now your stop loss can come to your, after entry you got a fractal formation, move it above the swing high. After that, do we have any other fractal formation on the way down? Continuous drop, so no fractal formation. Now at this particular area, candle 1, 2, 3, 4, 5. The green candle has got the highest high, so you have a new fractal. Trail your stop loss slightly above that. So after that, the trade starts moving again in your favor, not stopped out. Now you are having another fractal formation. So move it to this candle high. So if the trade goes against you, you are assured of a good gain here. Still moving in your favor, no fractal formation. Is this a complete fractal now? Not yet. It is a probable fractal, provided we have one more candle closing below. So this candle is in formation now. If it closes like this and another candle which closes lower, you will have another fractal here, and then you can trail it to this fractal. So you are still in the trade basis on the fractal formations. So as long as you have these fractal highs being formed, keep trailing your stop loss till the time you finally get stopped out. So this is another way where you can catch a good move, and this is based on technical terms, based on fractal highs and lows. Now let's look at method 4, which is the one I generally use. It is basis of supply and demand zones. So let me delete these markings. Method 4, trailing your stop loss basis on supply and demand zone formations. Those who are following me know by now that I am a supply and demand trader. So I enter trades based on supply demand zones, and I would like to manage that also on supply demand zones. So friends, whenever I initiate a trade, I look for explosive zones. So this particular candle was a very strong drop, so I picked up a good zone here, and that would be an entry point. But when I'm managing a trade, I'm not very particular about the explosiveness of the zone. As long as it's a picture of supply and demand, I'm good to consider that for my trailing stop loss. So whenever you are taking a short trade, you will trade basis of new supply zones being formed on the way down. if you are initiating a long trade at a demand zone, you will trade based on new demand zones that are formed on the way up. So why is the indicator not picking any zones here? Because there are no explosive zones, but just pictures of supply and demand. So after it started moving down, you had a drop, 3 candle base and another drop. So I have a new supply zone here, drop base, drop. So now I can trail my stop loss above this particular supply, a new supply which is formed. My initial entry was at the supply zone marked by the indicator. Now new supply formed, drop base drop, I can trail my stop loss. Another drop base drop zone formed here. So let me delete this. Let's mark this particular level. Drop base drop. So now I can trail my stop loss slightly above this supply. So even if I get stopped out, I'm going to make a small gain. On the way down, I'm going to drop 2 candle base and again a drop. So another drop base drop level here. Let's mark that. So in this case, price came back but did not break the distal line of supply. So I'm still holding the trade. I am not stopped out because I would have moved my stop loss above this supply. It's holding supply, moving down. On the way down, it has formed another supply zone, which is your rally base drop level. So move your stop loss above that particular rally base drop. Further on the way down, you have another drop base drop level. So stop loss would go beyond the drop base drop. So it did not get stopped out. Further when it fell down, it made another drop base and drop level. Let's mark this. And finally, the candle on 24th of March breached this supply. So I would have exited the trade somewhere above this particular supply. So new zones being formed on the way can be used for your trailing stop loss. So whenever you are trailing based on supply and demand, a picture of supply and demand is good enough. Don't need to find explosive levels. So you have made a decent gain, quite a good move, and now exited the trade. So friends, this is a basis of supply and demand zones that you can also trail your stop losses. So friends, I would also like to share another tip here when you are managing your trade is taking partial exits. So at a monetary gain, let's say you're making a 2-hour profit, book out at least 50% of your position and then trail whatever method you're using for trailing for catching the bigger gains. So by doing so, what happens is once you're locked in profits on 50% of the position, now you're feeling really good about the trade. You've made your money and then you get detached with the trade, easier to manage for bigger gains. So you can try doing that and see whether it suits your style. So some traders want to go all in, all out. Some people would like to scale out of their position. So it all depends upon what suits your mindset. So friends, there you have it. 4 powerful trailing stop loss techniques to help you protect your profits and stay in winning trades longer. So which one do you intend to use or are currently using? Do let me know in the comments. And before you go, don't forget to grab my free stock trading course and join my live workshop where I'll teach you how to master the markets like a pro. The link is in the description. Hit the like button, subscribe, and I'll see you in the next video. Happy trading.